Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world. And sometimes we find ourselves looking at a big pile of paper and wondering what kind of treasure is hidden inside. But today we're not just digging for treasure, we're going to see if the company is actually building a treasure chest or just a leaky bucket. We're diving into Realty Income Corporation's latest report, and what they've announced might just change how you think about real estate investing, especially when it comes to big chunky funds that hold a variety of properties. Before we dive in, if you like decoding these corporate filings and getting straight answers without the jargon, make sure you hit that subscribe button and join our Discord community. Linked in the description below. It is a great place to discuss these insights. Okay, so Realty Income Corporation, which is a big real estate company, has announced some significant movement with a new fund. They've started. Think of it like them launching a new investment product, and they've already brought in some serious cash. They've had what they call an initial closing for their US open-end core plus fund. That means they successfully gathered a hefty $716 million from outside investors on the 29th of September 2025. This is a big deal because it is the first time third-party investors have put their money into this fund. Who are these investors, you ask? Well, it is not just one person, it is a mix of big players like the Townsend Group and a bunch of other serious institutional investors. We're talking about public and corporate pension funds, so the money is coming from people saving for retirement, or from large companies. There are also asset managers and investment advisors, which means they are trusting Realty Income to handle their clients' money too. CBRE Investment Banking was the advisor in this deal, which is like a big name in real estate finance helping them put this whole thing together. And get this $716 million is just the beginning. Realty Income expects more money to come in through March of 2026 as they continue their initial fundraising phase. This tells us they are aiming to build something much larger than what they have right now. As of the same date, the 29th of September 2025, the fund already has about $1.4 billion in what they call its seed portfolio. This is like the initial set of properties they are managing, and a good chunk of these properties actually came from Realty Income, S own existing portfolio. This means they are transferring some of their own assets into this new fund. What is inside this fund, S portfolio? It is a collection of 183 properties that are bringing in rent. Interestingly, over half of the rent from these properties comes from industrial properties, so think warehouses and distribution centers. The rest of the rent is mostly from retail properties. This mix is important because industrial properties have been really strong performers, especially with the rise of e-commerce. Even with all these outside investors putting in money, Realty Income will still have a significant stake. They will indirectly own around 60% of the fund. This means they still have a controlling interest and a lot riding on the success of this fund. They are not just selling off their assets, they are managing them and benefiting from their performance long term. Now let's touch on something important that is listed here. These are the different types of investments that are registered with the stock exchange. We see their common stock listed on the New York Stock Exchange under the ticker O, and then there are various notes they've issued which are essentially loans to the company that they promise to pay back with interest. For example, they have 1.125% notes due in 2027, which means they borrowed money and promised to pay back 1.125% interest per year until 2027. They also have 5.000% notes due in 2029, meaning a higher interest rate of 5% paid on that debt until 2029. These different notes indicate their borrowing activities and how they structure their debt financing for their operations and investments. This part is a bit of legal fine print. They are basically saying this report is just for information. It is not trying to sell you anything or convince you to invest or not invest. It is just them reporting what is happening. And of course they have forward-looking statements. Companies always include these to talk about their future plans and expectations. They use words like estimated, anticipated, expect, believe, intend, and continue. They are essentially saying here is what we think might happen, but it is not a guarantee because lots of things can change. They also lay out the risks. This is where they tell you what could go wrong. Things like general economic downturns, competition in the real estate market, changes in interest rates and currency fluctuations are all listed as potential problems. They also mention risks inherent in the real estate business itself, like clients not paying their rent or going bankrupt. And in today's world, they even include things like epidemics or pandemics as potential risks, which we have all seen can have a massive impact on businesses, especially real estate. They also carefully mention the possibility of legal troubles and other unexpected events like acts of terrorism terrorism and war. It's a pretty comprehensive list of potential challenges. They also remind us that past performance is not a guarantee of future results. It is important to remember that all these forward-looking statements are just predictions though, and that actual results could be very different. And finally, the report is signed off by Bianca Martinez, Senior Vice President, Associate General Counsel and Assistant Secretary. It is dated the 29th of September 2025. So what is the big picture here? Realty Income Corporation is actively creating a new investment vehicle, the Core Plus Fund, and they're reattracting significant capital from major institutional investors. This shows a lot of confidence from these sophisticated players in Realty Income, its ability to manage and grow this fund. By contributing properties from their own portfolio, they are demonstrating their commitment and capitalizing on assets that have already proven to generate income. The focus on industrial and retail properties suggests a strategy that balances stable income streams with sectors that have strong growth potential. While real estate always comes with risks like market downturns and tenant issues, Realty Income is openly acknowledging these challenges. The fact that they retain about 60% ownership of the fund means their success is still heavily tied to its performance, which is a good sign for investors. This move seems to be a strategic effort to grow their assets under management and diversify their business further beyond just owning properties directly. They are essentially becoming a fund manager as well as a property owner. This is a smart move for Realty Income looking to tap into the growing demand for diversified real estate investment products. The significant first closing is a strong indicator of market appetite and their ability to execute. The true test will be their ability to continue attracting capital and to deliver solid returns from the underlying properties over the long term, especially as they face the listed risks. Alright, that is our deep dive into Realty Income Corporation, its latest announcement. What do you think about this new fund and the strategy behind it? Let us know your thoughts in the comments below. If this breakdown was helpful, smash that like button, subscribe to Corporate Decoder for more insights, and don't forget to check out our Discord community in the description. Thanks for watching. I'll see you in the next one.